You hear the word credit a lot, but what does it really mean? Credit is simply borrowing money now and promising to pay it back later. For example, you get a new phone today and pay for it over time. A bank or lender trusts you to repay them. This trust is the core of credit. If you keep your promise, you build a good reputation. Lenders want to know you're reliable before giving you credit. If they trust you, borrowing is easier. If not, it's harder. But there's a catch. You usually pay back a little extra called interest. Interest is the fee for borrowing money. The lender charges this as payment for their service. So, understanding interest is key to using credit wisely. Credit is all about trust, responsibility, and paying back what you owe. If you use credit well, it can help you get things you need. But if you break your promise, it can make life harder. So, credit is a financial promise you should always keep. Let's see how this works in real life. Let's look at how credit works in everyday life. Credit cards let you buy things now and pay later, like groceries or movie tickets. Car loans help people buy cars by borrowing from a bank and paying back over time. Mortgages are loans for buying homes, often paid back over many years. Credit makes big purchases possible, even if you don't have all the money up front. Whether it's a t-shirt or a house, credit is about trust and repayment. Lenders trust you to pay them back, and you promise to do so. If you keep your promise, you can borrow again in the future. If not, it becomes harder to get credit. Using credit responsibly opens up more opportunities, but misuse can lead to problems. So always remember, credit is a tool, not free money. Use it wisely and it can help you achieve your goals. Now, let's talk about the magic number that measures your credit. Your credit score is like a financial report card. It tells lenders how well you handle money and repay debts. Scores usually range from 300 low to 850 excellent. The higher your score, the more trustworthy you seem to lenders. A good score means better loan offers and lower interest rates. The biggest factor is your payment history. Do you pay bills on time? Even a few late payments can lower your score. Always pay by the due date. It's the #1 rule. Another factor is credit utilization. How much of your available credit you use. Try not to use more than 30% of your credit limit. Using too much can make you look risky to lenders. How long you've had credit also matters. The longer your history, the better for your score. So, pay on time, use credit wisely, and build a strong history. Next, let's see what else affects your score and why it matters. Other things affect your credit score too. Having a mix of credit types, like a card and a small loan, shows you can handle different debts. But don't rush to get many loans at once. Applying for too much credit quickly can lower your score. Why does good credit matter? Landlords check it when you rent an apartment. A good score helps you get loans for cars or homes, often with lower interest. Even mobile phone companies and some employers check your credit. Good credit can mean lower insurance costs too. Basically, good credit saves you money and opens doors. It makes life's big steps, like buying a car or home, easier and cheaper. It also helps you in everyday situations, like getting a phone plan. So, building good credit is worth the effort. It's about making life smoother and more affordable. Now, let's talk about how to build good credit from the start. How do you build good credit, especially if you're just starting out? Try a secured credit card, where you deposit money as your limit. Use the card for small, regular purchases, things you'd buy anyway. Always pay your bill in full and on time. Set reminders or use automatic payments to avoid missing due dates. Paying in full helps you avoid interest charges. If you can't pay in full, at least pay the minimum, never miss a payment. Keep your credit utilization low, ideally below 30% of your limit. Don't open too many new accounts at once. Each application can cause a small dip in your score. Be patient. Building credit takes time and steady habits. Responsible use now sets you up for future success. Good credit is built step by step. Let's see how to keep your credit healthy for the long run. Check your credit report at least once a year. It's your financial health checkup. You can get a free copy from credit bureaus like Sybil, Experian, Equifax, or CRIF. Look for mistakes or errors, like wrong late payments or unknown accounts. If you find any, report them right away to protect your credit. Guard your personal information like PAN and Aadhaar numbers to prevent fraud. Scammers can use your details to open credit in your name, so stay alert. Building good credit takes time and consistency, but it's worth it. Good credit helps you reach big goals like studying abroad, starting a business, or buying a home. It makes borrowing easier and cheaper. With good credit, you have more choices and less stress. So be smart, stay careful, and keep your credit healthy. Your future self will thank you. Credit is your key to bigger dreams.